So tonight we're talking about Cottonwood Apartments. Cottonwood Apartments is a 506C offering. For those of you that aren't familiar, we started this one as a 506B, and we actually did a webinar last Wednesday. If you'd be interested in the replay, we can send it to you, of how you switch from a 506B to a C. So it was a very interesting webinar, and we officially switched this particular property over. So it's in Lakewood, which is a suburb of Denver. So we'll go to the next slide, Mike. So we're going to go through the sponsor team, an executive summary, market and property overview, business plan, and how to invest with us. We also admitted that there'll be Q&A, so you can put your Q&A in the chat, or at the end we will have a period where everybody will be able to unmute themselves and ask any questions. And obviously, if you're interested in this deal, reach out to your contact from Massive Capital that you know, and we'll detail who the team is a bit later.
Oops, sorry,
So
I missed your disclosure.
I expect everybody to read this in the 30 seconds that we leave it up. So just to let you know that we give you the best information possible. None of us are accountants or lawyers. This is a 506C offering. You'll get a copy of this presentation later, and you can read that at your leisure. So this is the Massive Capital team. We're getting to be a massive team. So on the left, you have Sanjay, Shirar, and Mike. Mike's going to be leading part of this presentation. Sanjay is also on the call. He'll had to pop off. He'll be right back. And Sanjay also went up and did a lot of the due diligence with Nermo. And then across the top, you'll see myself, Jasmine, Maria, and Candice. We're your investor relations team, and the ASQUAT is marketing. And then we have Brad, and these are all acquisitions, and the asset management team. Angela is our chief of staff. Jonathan, who's also in the Denver area and part of this deal, is our legal counsel, and Senate is involved in our education program. And we have 2 positions still to fill. So Massive is growing very quickly.
Sorry. And I think Nermo made it back, but go ahead.
Back, Nermo?
Yeah, I'm back.
Awesome. You can introduce yourself then.
All right. Just in time. So that's me, Nermo Ramalingam. I live here in Denver, Colorado. My background, we started in IT management, now moving into real estate. Started in a single family, doing fix and flips. Some of my flips have been on HGTV as well, but I realized that is not a scalable business. Started moving into multifamily, and that's what we do primarily these days. The picture there is the property that we bought last year, and that's a big story. We'll talk about that in the next slides, but that plays a big part in this offering as well.
Okay, thanks, Nermo. Go ahead, Trevor.
So Massive Capital has several projects. This gives you an idea of where they are. Last year, we closed about $106 million worth of properties. And you can see we've been pretty busy so far in 23. So we closed Amberwood Apartments in Dallas. We also have a land development deal. We're doing a couple of new deals. The most exciting, I think, is X-Base. And then we are talking about the Denver deal here. And the top one is a 506B deal in Georgia. And so this is our second deal in the Denver market, and the second time that we partnered up with Nermo. So we're very excited to have this. It gives us a lot of synergy with the proximity of these 2 deals.
Awesome. Thanks, Trevor. So on to the executive summary about the Cottonwood Apartments. You see the back. This is the background, back of the property picture. And then we'll get to some nice slides on the front of that. I'm going to just cover a couple things, and I'll hand back over to Nermal to go forward with the rest of the presentation. But one of the cool things about this deal was We started, we talked earlier, we have a property in the similar area, 5 minutes away. We started going out to Denver and did a meetup jointly together, Massive Capital, Blue Will, and Circle M Capital. We did a meetup together, started, getting to know the brokers better. Went and walked this property, which Nermo had put an offer in previously at 4.2 million. We went and walked it. The whole group got more comfortable with who we were and the opportunity to close, be able to close, and came as well. The seller was ready to negotiate on the pricing. And at that time, then after that visit, Nermal continued to follow up and was able to get the property under contract at a much lower price point than where it started, and made it really work well. And again, as being close to our current assets, that gave us a lot of confidence in how we would operate and what it meant on the rents, the opportunity to increase the rents, the rent bumps, increase the value of the property, do some value add based on what we're seeing on our other property at Ingalls, and continue building up that process. So a little bit over on the returns. This is, one of the things, a lot of people, compared to markets around Texas and others. So one of the things is a slight risk adjusted market here, meaning that things are about insurance and tax is much different in the Colorado market than it is in, say, the Texas or the Florida markets. So the what is going on as far as adjustments to taxes and insurance is not the same out here. So and you'll see when you look at our pro formas, we're running at a lower expenses, and that's even shown in the current property that we run. So, we're looking at a nice, double basically of your return over 5 years, a 7% pref, and we're going with a 70-30 split. So nice opportunity, nice return, kind of a lower risk market opportunity. So and this does have we will be doing a cost segregation study on this, and just kind of shows here, the expected, value of that is, 49,000 of the value on $100,000 investment in the first year. And that's now with the 80% rather than the 100% bonus depreciation. Nermal, I'm going to hand it over to you, and if you want to share anything based on the previous two as you go forward, please do. Thank you. All
right. I want to, emphasize one big thing on this slide is the big story that we have. Sorry, give me 1 second. Give me 1 second. Can you hear me?
Yes. Yeah, we can hear you fine.
Okay. So the main thing is the story behind this property is the one that is listed in the bottom, right? Same team, same location, second property. We have a property very close by, like Mike mentioned. We purchased that last year. We have been doing a good value add. We've been getting at or above pro forma rents in that property. And this property is less than 10 minutes away. And so we know exactly what we are walking into. We know the location, we know our demographics, we know what rents we can get, and we know our target audience. So that makes a big difference in this property, and we know what we are paying for and what we can get out of it. So that is a big reason we like this property as well. We can leverage our existing relationships with our contractors, with our property managers. All those plays, as small as they may seem from the outside, They may not play into the numbers, but they play a big part in the overall big picture of things when we are walking into a property that we have prior experience already. So that's what I wanted to add to this slide that you mentioned, Mike.
Okay.
And also the other big part is the debt. So the debt is, we got a very attractive debt from Freddie, the Freddie small balance loan at 5.56% fixed for 5 years. So that's the fixed rate reduces our interest rate risk to this investment. And also we have a low leverage, so it eliminates leverage risk on this property as well. We are leveraged at 69%, like it says. So, we have a good buffer there as well. Also, in terms of purchase price, we did, like Mike mentioned before, we did get it at a good price around 200K unit, where properties are still selling even to this day. If you go and check in that neighborhood, properties are selling somewhere between 220 and 240K right now. So we have a good entry point. Our cost basis is well maintained, and we know the location. There is good upside in rents and NOI growth that we'll see in the next few slides. So this is the property that we are looking at. It has 3 1-beds and 15 2-beds, a total of 18 units. The 1-beds are about 600 square feet. 2-beds about 850 square foot. So they are pretty large units for that neighborhood. The reason that we are talking about the square footage is, you'll see it. Let me minimize this. Okay. So renovated, what we are targeting is 1450 for 1-bed and 1650 for 2-beds. In the next slide, we'll talk about, can you go to the next slide?
Yeah, I was trying to.
Yeah, so the next slide is where it shows how we are being conservative in our pro forma as well. On the left side, when you see the map, that's 3600 Ingalls is the property that we bought last year. I mentioned 8220 West 16th is the property that we are buying right now. So it's about 8 minutes away. The picture below the map is the updated units. We updated those units, and we are getting 1650. We have one of them on the market for 1700 right now. On the market. So for 650 square foot, we are getting 1650 in rents. That comes to about $2.53 per square foot. On the right, renovated units in our target, the current property we're purchasing, we're only targeting a $1.94 price per square foot at 1650. We are already getting 1650 or above in our current property. We are targeting only 1650 for a bigger unit. So we are pretty confident we can get those rents. So for example, the picture below, the Zillow picture, is a unit close by that is on the market right now. It's updated, a little bit updated. The kitchens are updated. It is marketed at 1800. It's 800 square foot. A little bit less, not terrible, but they are marketing it at, or they're asking 1800 for rents, which shows that our estimate of 1650, or our target of 1650, is still conservative given market conditions. Also, yeah, please stop me if you guys have any questions. You don't have to wait, but so this is the front of the property. Very well built, brick building, brick in the front, cinder block in the back, as you see in the previous pictures. Manicured lawn, very well, mature trees in the front. So it has a good curb appeal. The property looks nice as you walk in, so that also plays a part. When people are walking in, they like the property. This is just a map view of the property. So where it says the block Denver, that is the downtown, and our property is just west of Denver. So in general, in Denver, the mountains are on the west, so where you see Golden and all that. So that's where the foothills of the mountains start. So people generally like to live on the west side of town. You get good mountain views, close to the mountain if you want to go skiing. So we are on the west side of town, which is a well sought after location as well. Okay, high level, again, 18 units, like we mentioned, 1959 built. The occupancy actually was 96% when we were looking at it, but they had one unit for showings, which is now leased out as well. So currently it is 100% occupied. About 850 square foot average. It's a pretty big size, nice units. 1350 at average, and we are only trying to push it at 1600. So we have good chance of hitting those rents or even going above that.
Yep.
So again, the unit mix, like I mentioned, is 3 1-beds, 15 2-beds. It's a 3-story unit, and even though it's part of Denver MSA, but the actual submarket is Lakewood West. One good thing about this property is that big capex items have already been taken care of. The things that you have to put money but you don't see it in rents, right? Like the roof has been replaced in 2017. It has 20-year warranties. The boiler has been replaced. All the windows have been replaced. So all those big ticket items have already been taken care of. And also the unit, inside the units, I would say about 50-60% of the units have been already upgraded. They have LVP floorings, new paint, like you see, nice front doors, new paint. Some of the fixtures have been updated. Some of the bathroom vanities have been updated. Some of the tiles around the tub has been updated as well in certain units. The only thing they did not touch, I shouldn't say, I think in 16 of those 18 units, the main thing is the kitchen has not been updated. And that's where our value add comes into play. That's where we have the bigger opportunity to update the kitchens.
Yep.
So
Perfect.
Again, the back side of the units, even the back side, it is nice and clean, manicured lawns again, and trees are trimmed. So it looks nice from the front and the back. So, okay.
And plenty of parking.
Yeah, plenty of parking. I think there are 29 parking spots for 18 units. So what is the business plan we are trying to do here? Like I mentioned, 60% of the units have updated, even on the interiors. But what they did not do is raise the rents to meet the level of upgrades that's already been done. So our first step here is to push rents to market based on the current upgrades as the leases come to end this year. So once we have done that we have about $50 to $100 delta right there by almost doing nothing. So next step is where we are gonna implement our upgrade plan. The kitchen, cleaning up the kitchen, painting the kitchen, updating the hardware, updating the appliances. So that should give us a good bump in the rents. If some of the vanities are not, if the vanity in that unit has not been upgraded, just put in a new vanity in there. Some freshening up the landscape. There is some there's quite a bit of space in the back. There's an opportunity to put in a dog park. We can just clean up the front, power wash the brick, so it looks a little bit bright and nice. The only issue that we found in the inspection was there is a sewer maintenance work that needs to be done. We already have a bid for about $4,400 to fix it. So that's the only thing that needs some immediate attention. But other than that, the property is in a pretty clean condition. Also, the property management. Again, the property manager is where our bigger.
Oh,
Oops, something happened.
sorry about that.
Oh, okay. The property manager. So we are going to bring in our current property manager that we use already. So we have good working relationship with them, and they have worked well with us for the past 1 year. So we are bringing preferred property manager, and who will also help us execute this business plan. So that plays a big part as well. We know our property manager, and we have a good relationship with them as well. So the business plan. So we talked about the business plan. So the timeline of it. What we are thinking here is the first 0 to 6 months, like I mentioned, as the leases come in, we're just going to bump up rents to match the level of upgrades in those units. After that, slowly start fixing up the kitchen and start pushing the rents. So by 12 to 24 months, we should be almost done with all the interior upgrades. And then we assess our income and expenditure along the way, and we keep pushing rents at that time. So once the property is stabilized by hitting the market rents, we're just planning a minimal increase in rents after that. So after 36 months, depending on how the market performs, we will evaluate, reassess the market rents, and also evaluate the timing of the sale of the property at that point. Okay. So here, we'll talk more about numbers here. So on the left-hand side, it shows our purchase price. Like I said, 33.6 million, 200K a unit. We have a loan for 2.1 million, and our LP equity is about 1.75 million. So we have a 2% ag fee. Our renovation budget is about 171,000, 36,000 in closing cost, and about 44,000 in reserves. Like I mentioned, we do have an attractive Freddie's small balance loan at 5.56%, 5 years fixed, 30-year AM, and we also have 2 years of IO baked into that. On the right-hand side, you will see the table for a typical $100,000 investment. So for every $100,000 you invest, the projected cash flow for year one is about 4,400, so about 4.4%. Second year, when we we fix the kitchen and then bump up the rents, you should see some additional cash flow at about 7%. And then it kind of plateaus at 6%. So it kind of averages for the 5 years at 6.01%, like it's shown below. At the end of 5 years, you can see the profit from sale, about 67,000. Return of your initial investment for 100,000, and you add your cash flow, add your profits, and add your return of member capital, you should see a total of 197,000 return. That comes to about a 1.97 multiple. So roughly speaking, you should see double of your investment at the end of 5 years. That exit, our exit is still at 5 years. We are fixing that at 5. If you run those numbers at an IRR level, it comes to about a 16 IRR, about a 19.3% annualized over the 5 years, 6% average cash on cash. On the left, it also shows the cost segregation that Mike mentioned before. So the tax benefits of this, right? So you will see about 49,000 in bonus depreciation for year one. 29,000 in bonus depreciation for year one, and 49,000 in cost segregation depreciation spread over the 5-year hold. So any number that is shown on the right does not involve the tax benefits. So it is an added bonus for your investment.
So what exactly will be your tax benefit for you would be based on your income. So this one helps to bring down your income. So eventually, I mean, it can get you a good tax breaks for starting from next year when you start filing for taxes.
Yep. And so I would just share on this a little bit, Nirmal, as well. So based on this slide, and the business plan, you get a good idea, of all the assumptions that have gone into the underwriting. For those that want to take a little deeper look, you can get an idea of the projections. They're all based off of what we've shared of, where we see the rents and the planned rent bumps based on the comps in the area. And also that we've, comped this based off of our property on both expenses as well as the operation expenses, insurance, taxes, as well as the rent. So that's the main thing about the pro forma, but we just want to be, it's available here for those that want to take a deeper look. And to make an investment, this is the plan here. Trevor, do you want to go through the rest of this and wrap up the
Yeah, so I have put a
investment
couple of links in the chat, but you can also reach out to anyone from Massive Capital. So we are raising money right now. Our wiring deadline is July the 19th. So we've got a little bit of time to fill up this particular, but it is a small offering on a good property with a good return. So it works out really well. There was a question in the chat here of the cap rate. And I think if we go back to that slide, I think
okay, I was gonna get finished the present. Is there anything left? I think,
perfect.
And then
we'll
take
the
questions.
most important thing is that this is a really nice, clean property in an area that we're already doing business a mile away with a management team, with a local partner, and that property is performing very well. I like to joke this property is from 1959, the year I was born, and it's as good looking, as a good shape as I'm in. Actually, probably better. So it's a really great property. And then one of the things I'd like to stress too is this does come with a 7% preferred payment to the limited partners. So I want to make sure that you understand what that means is that the first 7% of the cash flow gets paid to the LP investors. And if you look at this particular deal, your average cash flow is about 6.7%. So the GP team is highly motivated to make the cash flow higher than that, because we don't make any money until you at least make your 7%. And we're all doing this to build our personal wealth. And so we're very motivated for us to be able to do whatever we can to keep the cash flow as high as possible for the investors so that we also can share in the rewards. So those were kind of the two things that I wanted to make sure I brought up.
Okay, thank you. And you want to go to the questions now?
Yeah, there was the one question under the cap rate, and I think it's on the slide before that. Keep going up. There was one, because I think we bought it 5 and went out at 5.5. I think, if my memory is.
No, I can take that one. So
yeah, go ahead, Normal.
Yeah, so Denver in general is a low cap environment. It's been that way for years. So the average cap rate that is trading in the Lakewood market is in the low 4s. So we are buying at a 4.43 cap, and we are expecting to sell at a 5 cap. So the properties are still trading in the low 4s in the Lakewood area. If you go to like Denver metro, like proper Denver, properties are trading in the high 3s, 3.75 to 4 cap is where they are trading right now. So cap rates are very low here, always like similar to, we can say, if you want to compare, it's like similar to like Austin or LA or Phoenix. These markets have always traded low. And our exit cap of 5 is still conservative. We are expecting to exit somewhere in the high 4s, but we are being a little bit conservative at exit of 5 cap. The stress test shows us that we can exit even at even worst case scenario. We have to push it at a 5.5 cap exit. We are still getting a 13.4 IRR. So it still passes the stress test, even if things turn against us.
Perfect. And then there's a new question here, Nermal, if you want to take it. Related to, are there elevated risks due to a smaller number of units, 18 units, and the two vacancies as 10%, for example?
Correct. That's true. I mean, smaller properties do have some kind of a risk. I mean, if you compare to a 1,000-unit property, yes, it is a little bit higher. But the thing is that we are looking here is the property has, if you see the history of the property, it's been for the past 4 years, the current property, the current owners have owned it. They have been running it at an average of 2.7. I think was their vacancy rate. They've always had people come in and take these units pretty quickly. We have 5%. So starting from year 2, we have a 5% vacancy in our underwriting. So which is more than the average that we have seen in this property for the past few years. So we do. I mean, even with that risk, given the demand of the location, we are good. We have a good buffer at a 5% vacancy. Hopefully, we will run it lower than that, but it can manage up to a 5% vacancy. Yes.
Perfect. Great questions. Yes.
And we do have the sister property up the street with the same management company. So again, if somebody's looking for a unit, we have at least 2 options for them to be able to get it. So combined, it's still not a large portfolio, but combined, it has some efficiencies.
True. The units. I mean, the other property that we have, we have one unit, like I mentioned, on the market, and we've had, I think, 21 applications or something for that property already. It's been on the market for less than a week. So we have good demand in that neighborhood.
And while you think about the next question, I wanted to share 2 other things real quick about just getting access to this deal or others. I put again in the chat the link to be able to sign up into the portal. There's no obligation to sign up in the portal. It'll just give you a chance to see that. I do want to warn if you've not been in our portal before and or one of the co-sponsors portals and acknowledged as a relationship. Oh no, we've changed this now to 506C. I'm sorry. I was going to say you wouldn't see it, but now you will see it automatically because we've changed it to a 506C. So if you link into the portal, you'll see it automatically. If you scan one of the QR codes here, mine or Sanjay or Candace, it should take you as well to the portal to sign up. So I'll let Nermal go ahead and take the next question.
So the population growth in general in the Denver metro area has been a steady, I think it is like about 1.5% in the past few years. There's a steady growth in population. Denver has become a very attractive places for tech jobs. That's what's fueling the growth here in the Denver metro. A lot of the tech companies that have left California, a lot of them have come to like places like Austin, Texas, but a good chunk of them have landed their headquarters here in Denver. We have a place called the Denver Tech Center. So that's how much tech jobs are here. So that's what's fueling the growth. So we had good job growth and wage growth and population growth in the Denver metro steady for the past few years. It's about somewhere between 1.2 to 1.5%, if I'm not wrong.
Great. I didn't see, I lost the chat, sorry. Any other questions, Trevor?
I don't see any more questions. And again, you can feel free to unmute yourself too.
Yeah, perfect. That's what I was gonna say. If anybody has another question, feel free to either raise your hand or just unmute yourself and ask away.
You guys said you were bringing in a property manager to help increase occupancy, but I thought you said it was 100% lease.
Not to increase occupancy, just to maintain the property. We do. It's not self-managed property. We do hire a property manager, a property management company to manage this property. We're just bringing the same property manager we are using for our other property we have in the neighborhood.
And it's currently self-managed, and they're not pushing the rents. They're not pushing. They want to basically just get out and keep it fully rented. So a good property management company can also help us push the rents, as well as help us manage any turnover or make readies.
All right, I was just looking on slide 18 under the little number 4. It said bring in preferred property management team Atlas to help increase occupancy.
Okay. Yeah, we've been, there's technically no problem with occupancy. It is just maintaining that balance between occupancy and the rents that we can get, right? So we don't want to push our rents too high and lose occupancy, or keep it too low at 100% occupied. So maintaining that balance, maintaining the speed at which they can bring in people. So what these guys have done for us too is I think they're managing about 1,500 properties in the neighborhood. When we had a vacancy, they brought in people from one of their other properties they manage. One of the tenants or residents that we had who had to move out, they found another property, another unit for them in one of the properties they manage. So they are very well connected in that neighborhood. That helps, both ways. It helps the residents find if they can't pay the increased rents, they can find a cheaper property. Or if some other resident from their other properties looking to move, they push them towards us. So we have that good symbiotic relationship with them. And they also know where they are very in tune with the market. They know what rents we can push to get those pro forma numbers. So that's where their expertise helps us.
Appreciate that. That's great feedback. Thank you very much.
Yeah,
Thanks. Great question. All right, who wants to go to Denver? I love Denver. Denver's so beautiful.
It's definitely a beautiful place.
And we will be in Denver in 2 to 3 weeks. I'm not exactly sure, but 2 to 3 weeks we'll be in Denver having another meetup as well. And love to have anybody join us that's either in Denver or wants to come out with us.
Where are you located?
Myself, Mike Bailey, I'm in Houston. Nermo lives in Denver near the property. One of our other partners, Jonathan and Monet Meter, they are also based in Denver.
Anything show up in due diligence you all had to work through with the owner, or obviously probably not a lot where you wouldn't have moved forward to buy it, but anything at all you willing to share?
Nermo, you want to talk about the due diligence findings and the owner discussions?
Yes, we did do a full due diligence. We did do a full inspection. We have the inspection report. The inspection report came very clean. The property has been well maintained by the past two owners. They have done a very good job of keeping the property clean, having good quality residents there. If you walk around the property, it's not like you won't even see it, trash thrown around. So the property, there's no trash. It's clean. The residents respect that property. When we walked every unit, 99% of the units were well kept by the residents, pretty clean. There's a lot of families living there. So in our due diligence, like I mentioned, the only big or red flag that showed up was the small sewer repair that we have to do. Other than that, and also, yes, the one more other thing is, there is Zinsco panel in the units that we have budgeted for to replace ASAP. But other than that, plumbing has been updated, electrical has been updated, new HVACs, new windows, double pane windows, new roof. So all those things have been, whatever was needed by the property, the owners have made sure they do it. So the property in general is well maintained. Anything that we have to do is small nitpicky things. I think the gutters need to be cleaned up a little bit, stuff like that. Very small things are the ones that showed up on our due diligence.
Can I ask two more quick questions? Am I allowed to ask two more?
Yeah,
no,
you can ask
that's
as
great,
many as you
please.
want.
Perhaps I didn't hear about the sewer. Can you just share just a little bit about that minor sewer fix you got to do?
Yeah, so there is a small belly just outside of the property. It's about 7 feet deep. It just needs a spot repair at that location.
Gotcha. And then I thought I heard you say something about the property served by a boiler. So does each unit not have a hot water heater in it, or the whole, instead of each unit having a hot water heater, is the whole property served by a boiler?
Correct. That is served by a boiler. Yes.
Wow, that's pretty interesting. A lot of times in apartments, I've seen hot water heaters, but I mean, hey, whatever works.
Yeah. I mean, the boiler is actually pretty new. I think it's less than 10 years old. It's pretty, what do you call one of those, efficient boilers. They can handle much more than what is being thrown at it right now.
Gotcha. Okay. I appreciate y'all being so candid and open with it, answering.
Yeah. And one thing too, we said it quickly, but just to make sure, we do have to change out the electrical panels in all of the units to a more modern electrical panel, and that's in the budget. It was part of our inspection. It happens in a lot of older apartments and they need to get to a newer, and it also helps a lot with your insurance. So if you have those old panels, insurance can be high and or unavailable. And so but it's all budgeted for, all ready to go as soon as we take over.
Yep.
What other value adds? I know you guys mentioned the kitchen is the main one, but
Correct.
Is there opportunities to add, like, covered parking, or are there washer and dryers on the property?
Correct. So there are multiple value add, right? One is, like I mentioned, the kitchen countertop, paint the kitchen, replace the hardware, make it look more modern. The boxes in it, the cabinet boxes are in really good shape. They are wood cabinets, so there's no reason to replace them. It just looks old, so we just have to paint them, paint them white with black handles. It just pops, right? So that's one. The second thing is, I think you mentioned all of them. The second thing is, all the units are they have a wall to the front and the back of the unit. So every unit has good light, and they are also exposed to the exterior. So the space right next to the kitchen, there's a lot of space. It's like a breakfast nook. You can have a small breakfast table there, but there's enough space to add a washer and dryer. Since it's right next to the exterior wall, it's very easy for us to vent out the dryer. So that is the next value add that we're looking at. Also, if there is an opportunity to fix the cabinets, even resurface the existing countertop, or even put butcher block cabinets like we have been doing in our other property, stainless steel appliances, and that should give us the next value add opportunity. The third is one you mentioned, the parking lot. Yes, the parking, that location, there is enough street parking. It does not make sense to charge for parking, but it can make sense to put in some covered parking just on one side and see if we can charge some parking fees there. Denver is notorious for hail. We do get hail off and on. Cars get damaged that are sitting outside. So there is enough parking on both. So there's a street in the back, and then there is parking on both sides. So we can also put a covered parking on one side and see if there's any interest to get some money there. So those are the opportunities. Yeah, you got all of them. But yes, the appliances, kitchen, washer dryer, countertops, and parking. That's where the opportunity is.
Awesome. Any other questions? We're just about at the bottom of the hour. We're here to answer your questions.
And just to reiterate, I know some people may have come in late. We will be sharing, if you've signed up for the webinar, you will get a copy of you should get a copy of the presentation and the presentation or the webinar tonight as well, the replay. Thanks.
Yeah, if you guys look at the replay, have some more questions that you think about at that point, feel free to, call us, email us. We are happy to answer any questions.
This is any insight into new properties and buildings coming on in the pipeline in the Denver market. What's that been like? What are you expecting?
Sorry, I'm not able to.
It didn't come through quite. Do you want to try repeat that again?
I was going to say, what kind of new build is coming on to market in the near term? What's been the pipeline for new builds and competition?
Oh, new deals and acquisitions in the area or in general?
New units coming on, building, development, I guess. They get better for apartments. I mean, we're going to be competing potentially the new properties in the market, right?
Oh, so are you asking, are there new properties?
New construction in the area of its competition. How's it affecting the market, Nermo?
Yeah, so there is so if you see in the map, I don't know if it's in this map. Can you pull up the map?
Yeah, hold on. Yep, 1 second.
So there is this street called Wadsworth Boulevard that runs north-south. So there is a good amount. So if you drive south on
wrong way. Sorry.
If you drive, oh yeah, you missed it.
You want the smaller map?
Yes, I want the smaller map. Yes. So that map, so that street that runs, the blue one that runs right next to the park, the big park. So that is that's Wadsworth Boulevard. And if you drive, just keep going south on Wadsworth Boulevard, you do see new construction on both sides of the street, all the way. I think you drive more than 10 miles and there is heavy construction. So I think that's actually a good thing for us is we are not, they are not our direct competitors, right? We are not a Class A property. Even, we can make it look nice as much as they have as a new property, but not charge as many rents. So these new construction is going on in the neighborhood, and we provide a good alternative for the residents who do not prefer the high rents that these new units charge. So that actually helps our costs here. And also it shows that the submarket is growing. There is good demand. So, when a new developer comes in, we all know they don't build for no reason, right? They are building because there's a huge demand in that neighborhood. That shows the demand, and we provide a good alternative for the people coming into that neighborhood.
So we don't have the population information, but we made a note and we will get it and send it out as well.
But if you look, I mean,
Correct. That place is, there is no free spot there. Any new build is usually, demolition of existing structure and then building new apartments or new retail, whatever that might be. It's a densely populated neighborhood.
okay,
Awesome. Great questions.
Awesome.
Thanks, everybody.
very good.
So as we
Wonderful
mentioned before,
questions.
just reach out to your favorite massive capital person.
Or sign up in the portal
Or sign up in the portal.
directly, and then we'll reach out to you as well.
If you just sign up in the portal, someone will reach out to us?
Yes.
Okay.
Yeah,
perfect.
I've been texting too for people who are signing up.
I
Yep.
just received a text. I just signed up, so I'm assuming.
Yep,
Candace,
I
she's
just
a machine.
I just reached out to a couple of you. So
Awesome.
All right, well, I'll reply.
Hey, Vlad,
Great.
nice to see you as well.
Thanks for answering the questions.
Yeah, good to see everybody. Always
Awesome.
good to get questions. It makes us better too.
Great job, Trevor and Mike. And
Thank you
Nermal.
guys. Thanks. Normal, great job. Great
Normally, he is good looking. You just can't see him.
evening. I don't, I'm gonna,
I don't know
Usually-
what happened to my camera today. I'm sorry.
that's good.
Awesome.
the
Well,
fritz.
thanks, everybody. Have a good night.
All right. Good night.
Right.
Thank you, everyone.
Thank you, everyone.